take that point forward with Deepika Mundra from MNG Investments, who's joining in now. Deepika, good morning. Thank you for joining in. What do you make of this? You heard Yash about this phasing out of the weekly expiries. What does that do now to a lot of these capital market names, say the likes of BSE and a lot of these discount broking firms as well, who have relied a lot on retail participation for their volume growth and so on and so forth?
Hi, Harmas. Thanks for having me, and good morning to everyone. So firstly, market structure changes, right? And the capital market plays in particular have been trading at fairly premium valuations over the last 12 to 24 months. And when market structure changes, some of these valuations get challenged. So I think that the capital market plays in India are structural. We have seen financialization of savings, which is likely to continue, but changes in regulation as such is going to bring in volatility. So definitely not the best time to always get into these stocks at peak valuation. Probably wait for the right opportunity here.
So you all don't have it as a part of your portfolio, any of these capital market plays, Deepika?
No. So in the financial space, we are overweight the private banks. We are selectively overweight life insurance, but currently not exposed to the capital market space.
Talk to us about defense, right? It made a lot of sense a couple of years back. It generated a lot of wealth. There was so much spending by the government. But now the narrative seems to be that this public spending will shift towards consumption. Capex spend will shift towards consumption. And that will maybe put a lid on the kind of astronomical growth we've seen in defense stocks. With this concern, how should one approach defense stocks? Because it is one of your preferred plays.
That's right. So I'll address both the points, actually, both in consumption as well as on defense. What we have seen in defense after a long time is that there has been an order book build-up and stocks first react to order book. But we've also seen that the execution has been fairly good across the board. So I think that's something that we like. It's been reflected in the earnings. And given the geopolitical situation around the world, we see continued impact on defense stocks, which is likely to be positive, right? India potentially being an exporter to the world in the defense categories. So all those things put together make us positive. We don't think that these stocks are going back to their old valuations anytime soon of sub 15 times PE. We think this is a structural opportunity. On consumption, while yes, the government has of course tried to stimulate it, it's just that not everything will benefit. So there we remain actually quite selective in the consumption space, favoring more premiumization rather than staples.
Deepika, the other preferred play that you have is you're trying to play the premiumization theme here, be it travel or auto. Telecom is one of your preferred plays, but of course, you would prefer play this theme only via the market leader or through a proxy like Reliance Industries, because one of the other players, of course, is struggling as a going concern. What about the telecom space excites you here? Is this the prospects of more tariff hikes coming in or the increased adoption of 5G? What's your case here?
So here, for instance, well, the tariff hikes are already well known. Some of them have already taken place. What we like about telecom as a space is while the capex intensity is coming to somewhat of a pause, we're going to see significant potential for free cash flow generation. And these are the companies that have the ability to participate in data centers and some of the newer growth areas in the economy as well. But yes, we like all the other things too, which you mentioned earlier, travel in particular, and even within healthcare, we like healthcare services because that also offers an opportunity for premiumization and spending.
Telecom, what is the base case? The 3+1 structure continues. Will we continue to have 3 private players? Because that also influences an investment in a company like Industars, for instance. And what are your thoughts on Jio IPOs? Because that's coming 1 year down the line.
Yeah, Rima wouldn't be able to comment on individual stocks, unfortunately. But the industry structure in telecom, like we have in airlines, is quite favorable. Having 2 or 3 majority players ends up ensuring some sort of industry discipline, unlike what we had seen in the past. So we think that's a structural positive for the sector.
How are you playing the travel theme, Deepika? You're playing it through hotels, you're playing it through the tourism names, or a proxy, say the luggage manufacturing companies. They are not someone that they have done significantly well over the last year and a half or so. Most of them have been struggling. How do you play this theme? Hotels, proxies, or luggage?
I think the good part about the Indian market now is that it gives you so many optionalities, right? There are a whole string of stocks which didn't exist 5 to 7 years ago, which now are there in the travel space. What we like in hotels is the demand supply discipline. So we think that the supply for new properties, particularly on the luxury side, is likely to be more limited for the next 3 to 4 years as versus the demand. Airlines, again, like we discussed already, the industry structure is fairly disciplined. And then again, there are also the platforms. So, and platforms across multiple sectors offer you an opportunity to do things which are, subsector agnostic or brand agnostic. So the travel platforms also is another way to play the space.
Great conversation, Deepika. Look forward to more such. Thank you very much for joining in.